And we are live. Make sure the audio is working. When the VIX rips, you got to buy the dip. That's what we are going to discuss today. Dang, YouTube lags too much, huh? Make sure that this is working. We're live, right? Big delay on the phone. All right, let me reset. There we go. Okay, it took a while. All right, so it's working. We got the audio working. Let's go ahead and get started. Let's dive into it. When the VIX rips, the market rips. Now, what are we talking about here? So the volatility index is basically the inverse, right? It's basically the inverse to the S&P 500, the overall equity market, the top 500 companies in the on the planet, really. I mean, the S&P 500, right? The top stocks on the market. Well, the top companies, right? The top S&P 500 quality companies, right? Sometimes you get the top stock. It's not even in the S&P 500. For instance, Tesla in 2018, 2019, Palantir for a while. MicroStrategy did 100x over the last 4 years, not in the S&P, which is something we're going to talk about. All right. So anyways, volatility index is a gauge of fear, right? A lot of you are familiar with that, but I just want to get through this. We've been at 15, which is the bottom of the zone, right? 20 is the average. 20 is the long-term average. That's why I have it at 0. You always, in a bull market, you typically trend below 0, and then you pop back during fear. Those are buy the dip opportunities. Why? Because we're below 20, we're below the average. I mean, I can give you a whole case of reasons why you should buy the dip. Not financial advice, but it's common sense, right? You got to buy the dip when the VIX spikes. The biggest buying opportunity was back here in April when we had the tariff war. That was a huge spike. Now you had to wait, you had to be more patient for things to get extremely oversold. That was a high, that was a very high volatility or high fear period. And these are orders of magnitude larger once you get above 20, right? The first normal range is about 28. And then once you get to 36, this is like double the fear. It's not just 6 points lower. It's double the fear where you were here. When you get here, triple the fear. These are orders of magnitude higher, but we're below 20. We're below the average, and that tells us we're in a slow trending, low vol bull market. So what do you want to do? You want to buy the dip when you get close to 20, right? Once you spike to 20, that's when you want to buy the dip. Now, we've been at 15, which is going to be another average, right? We could go as low as, I hope I'm wrong. I hope we just trend lower, but I think we're going to get that correction, and we have some reasons that we're going to talk about. So just think of it 0. I got to extend this line, but this is the average. We're at 14. We could probably come down to 13 after the Fed meeting or after this week, but there's a lot of stuff. We have the employment report. That is the most important economic data. It could go either way. Maybe the market gets, caught off sides. If it does get caught off sides, we're definitely going to get a VIX spike to 20, right? Somewhere near 2018, who knows? That's my prediction probability. I'm thinking 60, 70%. Okay. But if the employment report comes on, actually, it depends on what Powell says. It really depends how Powell spins it. And we're going to talk about that too. But why are we going to get this dip? Let's talk about why we get this dip. It's not really just about what Powell says, but the market is overheating, right? Especially in the high beta, what up, trader, czar trader, especially in the high beta side of things, right? The high beta. We're going to take a look at high beta. What is high beta? SPH B. This is going to be the high beta S&P 500. Let's take the volume off. We've had a lot of volume. Okay. What does this represent? This represents the stocks that are moving at least 2 times faster than the S&P 500. High beta, higher volatility. On the upside, they get more gains. On the downside, when the market corrects, they fall much faster. So that's my warning here, right? We've been talking about a lot of these bullish stocks. I think we're going to get an opportunity to buy the dip over the next 3 to 4 days, right? Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday for crypto, right? But either way, over the next 5 days, maybe even 2 or 3, we're going to get that spike to 20, right? Once you see it come off 20, meaning it bounces and then it gets rejected, boom, that's probably a signal to start looking for the dip. This doesn't mean blindly go in, right? This is not financial advice. This is not blindly go in and say, oh, the VIX touched 20. Let me push buy. No, it means start looking at your favorite assets, right? Start looking at the things that are thematic, that have a theme, a strong uptrend, and they're part of the AI, blockchain, energy storage, energy generation, maybe gene editing, which hasn't really got too much of a boost yet. Robotics, who knows? Those are the hottest ones. Quantum computing, we'll see, right? Actually, I might get some quantum computing for the first time. I have like one share, but I might get deeper, right? The point is that opportunity is coming. We've been on fire. So if you look at the high beta ETF, you can see it's very oversold, right? Looking at the our volatility, not our volatility metrics, but looking at our momentum metrics on the daily chart, we can look at weekly. Let's start with weekly. Yeah, let's go to the weekly. Okay, let's go to the weekly. For you beginners, we're looking at momentum price analysis is what we're doing. We're doing price analysis here. If you're new, just kind of watch, pay attention a little bit. You're not going to pick everything up. I do have a course on it, of course, right? The guy has a course. I do have a course on it, just trying to be transparent. This one's a little more advanced though, and this is for my more advanced, viewers, whatever. So high beta, very overextended. You can see, look at these, boom, 1, 2, 3, three white horses. We're very bullish. So we're at the overbought territory. We can continue higher on the weekly, which I think might happen, but we're getting close to that pullback period. How about the MACD? The MACD is strong. Now, don't get me wrong. I'm not saying, I don't think we're going to see a long 1 month, 2 month pullback. I don't think so. Based off what I'm looking at, it looks like we're going to get a quick 3 or 4 day spike. Maybe 1 or 2 days, super spike, 3 or 4 days. I don't think it's going to be very long. I don't think it's going to be a month long unless it's more systemic, right? Unless interest rates start to surge and the Fed says something crazy. But I don't think we're going to get that. Probabilistically, I think we're just going to get we've had a lot of rotation. I think we're going to get a rotation into some defensive, some high dividend stuff. I'm not interested. Or I'd rather buy the dip on high beta, high vol, right? And basically, yeah, I don't think we're going to get a huge dip. That could change, obviously, but I'm just trying to pay attention here, right? So let's go to the daily, right? The weekly the weekly says, hey, we're going to get a dip and continue higher. All right, so here we go. Lots of overbought territory and it's trending lower. So once you really get a spike and close below here, you're rolling over, right? You're probably rolling over. So we've been overextended for a while. Look at the MACD. It already crossed back in the 15th. When was this? It crossed about 15 days ago. No, 14 days ago, whatever. So MACD already crossed. We're ready for a pullback. We might get stochastics, drop beneath the upper level, and that's going to be our trigger there. Now, when we go to, here's where we're probably going to rotate to. I don't think we're going to get a huge market correction for everything, but if we go to high beta, high dividends, right? Low vol, high dividend. This is the opposite. This is defenses. They haven't even moved yet, right? They're not even at all-time highs yet. As a matter of fact, you're getting a nice little bullish pattern. This might continue to downtrend. I don't think it breaks out and you should chase it. It's just more so a reflection that we might get a little defensive, especially if unemployment comes out a little weaker, which I expect it to, but not too much. The big issue here is I think we're getting some spending in the macro. Some $2 billion of issuance on the treasury side. We need a buyer. We have that buyer. We're going to go over the great reset, by the way, and talk about why this bull market continues to usher forward, right? Okay, so we're looking for the VIX spike. It's as simple as that. Don't make it too complicated. You're looking for that spike back to 20, somewhere around there. You don't got to be perfect and be like, oh, it didn't touch 20, but it's at 19 and it's rolling over. Just keep your eye there, right? Go find, make sure you have in mind something you're looking at. I'm going to go over what I'm looking at here, all right, to buy this dip. Oh, nice. Okay. And so anyways, what's our next topic here? High beta, overheating, VIX rebound, Powell uncertainty. Let's talk about Powell. All right. When we talk about Powell, we want to be looking at the bond market. So we're going to switch over to the bond market. Very important market. This is the credit market, right? This is the debt. This is what the market was worried about back in April. The reason why where's my watch list at? The reason why Trump reversed on tariffs being so aggressive was because the bond market basically said, hey, bro, you're not going to do it because we're, the bond market put a gun to his head. He wasn't going to do it. 10-year yield. We're going to go to the 10-year treasury rates, right? This is the bond market. They control interest rates, decentralized. Well, yeah, kind of, right? We don't know who they are because it's a bunch of investors. So they all speak at once. This is why we love the bond market, or we watch it, because it's not a single person. It's an entire market here, right? This is the bond market, controls interest rates. I'm bullish because it's still falling, right? It's still easing, expecting weaker inflation, which we are getting. We saw more today. And, a dovish Fed. That's what we're looking for. Now, if we spike to 4.5, then we might have a longer pullback, a more systemic, longer pullback, because that throws on recession threats and growth fears, right? We are plugged in. Good. So getting back to it, right? What's Powell? What do we want to see? We want to hear Powell say, keyword or key phrase here. We want Powell to communicate that, hey, we don't really need to cut rates because the economy is weak, but it's going to be prudent for us to lower the interest rate in the next couple meetings. We have more members more members voting for a cut on the next meeting. Why? To prevent anything systemic that could blow up in the credit market, in the real estate market. We know the housing market is weakening. We know prices are falling, and it would be prudent for us to ease policy in the forward months, but we're not doing it today. So we're looking for the toss up, right? We're looking for Powell to toss it up, for the sharks to come in and eat it up. In that case, we might not see a real big pullback. We might get it anyways, just because the market is mostly about positioning and sentiment. Well, not sentiment, but positioning, right? Some people might rotate. So you might get that spike either way. I think we're going to get it. But the real question is with Powell is, if he does give us that toss up, then you want to buy the pullback. You want to be even more bullish. But if Powell comes in and says, hey, look, we don't need to cut rates. There's no sign of us needing to cut rates this year, and surprises the market and says, we might not cut till next year. Boom, the market's going to sell off. You're still going to get the spike. I still think you buy the dip, but I think it's going to be more vicious, nasty pullback, and defensives probably roll higher. Why? Because the longer they delay the cuts and their speech on the cuts, the more systemic we could get a blow up somewhere. But that's not going to take out the entire stock market. There's way too much bullishness here, right? You just need somebody to buy the bonds, right? It's all the 10-year yield, and we do have a buyer. It is stable coins. Anybody creating stable coins is going to be buying these US treasuries, Circle, Tether, now JP Morgan, Wells Fargo. Every single bank and institution is building their own stable coins. Therefore, they will be buying US treasuries to back that. We have a buyer. This is the strongest bull market setup of all time. You're going to see, right? Mark my words, 2025. Could I be wrong? Sure. But I've done a study on different bull markets. I'm not the smartest guy in the room, because there's way smarter guys out there, but you don't have to be, right? You just have to use common sense. Markets go up, they trend up, and we want to catch the assets that are trending higher. Okay. So watch the bond market, shelter inflation. Here's another reason, right? Let's go ahead and cover some of the economic reasons. I want to switch the charts over to our economic news, which we haven't really done a whole lot on for my, returning viewers. Why? Because I told you we need to start looking at what we're going to buy here. The macro backdrop is very solid. So here's some reassurance. Oh, come on. Here's some reassurance for you guys out there. We're looking at this week. Let's look at this month. We haven't really done too much on this month. I haven't really looked at this month. So we're going to do high impact. We want to just look at the US. Let's do high impact. Let's just look at the high impact stuff first. Okay. So July 1st, ISM manufacturing starting to recover, non-farm payrolls, everything has looked good. I don't want to go back that far. Damn. Let's just go back for this week and kind of look at anything surprising. Remember, core inflation is falling. We're in deflation right now. Okay, it's trending lower. That's a reason for the Fed to cut, because they need to normalize it. Inflation is also tied to growth. If it falls so fast, then you kind of want some inflation. You want like 2 to 2.5% inflation, because that is prices, right? Corporate margins are part of that. Okay, if you're running a business, you don't want your prices to fall, because you're going to lose money. So you don't want zero inflation, right? Some people do. They say that. They don't know why. Not in this system anyways, right? We'd have to change the whole system. So anyways, getting back to it, we have Fed Chair Powell. So what do we have here? GDP. Oh, we had GDP today, right? GDP, Fed now GDP forecast like 2.5%. Remember, we were negative 3 months ago. Like, oh, total global economic recession gone. Why? Because that was a calculation misunderstanding based off imports. Now that, and this all ties into the Great Reset, right? This all ties into the Great Reset. So Fed interest rates, core PCE. Nah, we're gonna have to go back to the 1 star because I wanted to look at shelter inflation. I flagged this on Twitter this morning. Let's look at initial jobless claims. Look how they're falling, right? You're not getting unemployment spiking. It's just not happening right now. Strong labor market, which is why the Fed's probably going to delay. Continuing claims are rising, though. They're pretty high. So the people who are already unemployed are not finding a job yet. And that doesn't mean the economy is at risk. It just means there's probably going to be a slowing consumer, right? Consumer sales might slow for a couple quarters, which is fine. That makes the Fed more likely to cut interest rates, right? Not to zero, but a little bit at a time. We had, now what is it that we had today though? Okay, retail sales still strong. Great. What's the year over year? Retail sales year over year. We're looking good. I have a chart that covers that anyway. Still solid. Looks good. The trend. It's starting to reaccelerate higher, right? At a slow pace. Housing starts. Fed Chair Powell speech. Let's get to it. Where are we looking for? We're looking for, let's just go to July 29th. All right. So we had the housing price index. Remember, inflation is such a scare. If you have low inflation, you have unlimited growth because you can continue to print money, fuel GDP, fuel all these technologies and investment, and you're not getting a rise of inflation. So what's systemic about inflation is going to be energy and shelter. Those are the two biggest components of inflation. So right now, look at the housing price index. Okay. Look at this. It's decelerated for 2 months in a row, and this is back in May, so we're probably going to be actually lower here. We're probably going to be lower next month also. And what that tells us is the Fed can now basically, have a sigh of relief. Okay, shelter slowing down. So our policy mandate can come down to match that before we have a real estate, because real estate's like 350 trillion. We can't have a real estate collapse. It's the biggest asset class on the planet. Okay. So we just need it to cool. Okay. Housing price index. This is the momentum of housing prices. That thing has collapsed to 2.8. Inflation is done. Stop listening. Like, don't believe people still calling for inflation, tariffs. They're so stuck in their stupid politics. It's ridiculous, bro. Get out of your politics. It's deflation. AI, energy storage, all these technologies are reducing inflation. They're disinflationary. Get out. Like, stop talking from your. But they have to appease their political clients, which is why they're losing. Which is why retail investors have been destroying them for the last 10 years because they just buy the dip on tech. Okay. So GDP is good, and we're gonna get that tomorrow. We're gonna see more GDP tomorrow, obviously, but I think everything's pretty stable. We're getting the Treasury refunding announcement. That's gonna be how much debt that they're issuing. It's really all noise at this point. All we got to do is look at the bond market. My whole point was I wanted to show you guys how home prices are cooling. We already look at oil. Oil prices are going nowhere. They're flat, and due to create more energy, so we have disinflation. All right, now let's get back to our charts here. Back to our charts. So we have disinflation, Latin Fed GDP. Let's just get to our what we're going to be buying, right? Now, the S&P, as it pulls back, I don't know if anybody's trading S&P or just watching S&P 500. If you're a newbie, always start with S&P 500. This is the quality index of stocks. But for those of you who are like, I just watch it as a gauge, as a market gauge, I do. I don't want to own S&P 500. That's what everybody owns. I'm trying to outperform, right? We're probably going to get a pullback here to that 630. And then our next support would be like 625-ish, right? 626, 625. So we have some levels that we would be pulling back to. Pretty evident there. Let's go back to the 4-hour chart, see what that looks like. Yeah, pretty standard. I mean, pretty standard. Some other strong ETFs that I suggest, not financial advice, but that I suggest, you want to own the semiconductor ETF. A lot of people like SOX XOXL. It's like it's a leveraged ETF. I don't like it. If you consolidate, you lose value on it, right? I'm already leveraged in crypto, so I don't want to be leveraged in a bunch of other stuff. I want to be leveraged just in one asset class that I believe in, and I don't like that. So SMH, great. IWM finally, starting to come up, but this thing has been stuck for a minute. Small caps, I'd rather just choose my small caps instead of own the index. QQQ, probably the best index. If I had to, blindly buy the market without knowing anything, I just buy QQQ. You have ARK, who's crushing it, right? But I wouldn't blindly buy ARK. This is a momentum trade. And I'd have it in the portfolio too, but I wouldn't blindly buy ARK, right? All right. So I think we covered a lot of that. TLT. Now here's some of the reason why we should have rates coming down, because rates is interest rates are another big play in the market, the bond market. Look at this bullish divergence here. We have a lot of strong bullish divergence. You see the momentum picking up, stochastics, MACD, RSI. And what that tells us is that price is falling. And this is just pure technical analysis, price analysis. But the momentum, right, the buying pressure has been picking up for a while. And that tells us that we're due for a blow off top. Do bonds break out all the way to 100? I doubt it. But we could definitely, actually, that's possible over the next 6 months. It's possible with a slowing economy, right? Slowing segments of the economy, not the entire economy, the corporate side. The infrastructure is accelerating like crazy. The infrastructure side of the economy is accelerating. It's mostly going to be consumer spending. That might slow a bit because, people, let's just say it should be slowing a bit based off a lot of the research, which we're not going to go after. Now let's go over stocks. Let's go over the assets we're looking at here. Now, first, I want to flag Bitmine, right? This is in the BMNR is why would they do that? Anyways, Bitmine is an Ethereum treasury. Did I put it in wrong? No, this is the Bitcoin treasury. I think this thing can fly. I think it can fly. Okay. Now it did get diluted a lot, so it's hard to know what the technicals are. Let's take a look at the market cap. You see how the market cap went up to 4.7 billion, right? On your left-hand side, 4.7 billion right here when the price was declining. That's because they've diluted so much to buy more Ethereum. But that's exactly what MicroStrategy does. This is the copycat to MicroStrategy as an Ethereum proxy, right? Not a Bitcoin proxy. And they're aiming to get 3 to 5% of the Ethereum supply right now. You guys don't want to hear the statistics. Anyways, this is probably going to be the leader. You have Tom Lee, you have Kathy Wood buying it, you have Peter Thiel supporting it. I think they're going to get a lot of money. Keep your eye on this. Don't size up too much because, you never know. You want to, use some risk management here, but I'm trying to size in this thing. Okay. I'm trying to get in here for a trade and I want to hold it for a while, right? I do swing trading, I do position trading and not day trading. And I think we can play this over the next 6 months into December. We could probably see this it's at 4 billion right now. No, it's not at 4 billion. No, it's at 2. What is that? 2 billion, 2.3. There's so many different readings. Right now it says 3.5 billion, but on Robinhood it's at 2 billion. So that's kind of pissing me off. But either way, I think we can do a 5x here, especially with Ethereum moving up. So this is all about the price of Ethereum moving higher. As they hold Ethereum, they're also yielding 4%. So the more Ethereum they hold, the more net income, pure profit that they're going to make. They're due to make over 100 billion just holding that ETH, right? So per quarter, I don't even know. I don't know. I got to look more into it. Either way, I think it's going to fly. Ethereum is at resistance. And yeah, ETH is at resistance. You're seeing the classic. I think I showed this the other day. Here's where we are in comparison to the last cycle, right? In the last cycle where we had a huge blow off top, okay? We had this cup and handle like thing. You can call it a cup and handle. It really doesn't matter what you call it, but it looks like this. Okay. You get back there, you break out, you pull back, you support, and you move higher. This was a 10x move. It was actually more than 10x. That was a 10x move, a little more than 10x. It went from $34 billion, right? Actually, before the real push, $34 billion, it went up to 600 billion. So it did like a 15x, huge move. Now from here, we're looking at Ethereum maybe doing a 3x from here, I think at the most. This is going to take time. It might go into 2026 early. We'll track that as we come a little further, but for the most part, it's the same pattern. Okay. It's the same pattern. It's a huge cup and handle regathering. And that's what we're watching. The technicals are trying to reset. The MACD, though, is still very vertical. So, we're going to get some more clarity, regulatory clarity as the year goes by. Trust me, we're going much higher. Ethereum is basically, you could call it the gas, the real. I like to call it the real estate of blockchain. At least public blockchain. I like to call it the real estate of DeFi. Why real estate? Because decentralized finance is an entire planet of finance, but decentralized. Okay. Now Ethereum has the most developers on it. The biggest, it's the biggest network by far outside of Bitcoin, as far as the developers and all that. They provide a 4% yield. They actually burn yield. The more people use it, the more they burn their own token. So they're hyper deflationary. And as long as it's being used, hyper deflationary, BlackRock's building on it. This is the platform for crypto. Now, you guys already know I'm more bullish on Chainlink just because the market cap of Chainlink is much smaller. Nobody knows about it. I think it's a better risk reward opportunity. But Ethereum is right there, right? Bitcoin, Ethereum, Chainlink. So we could probably see Ethereum. I'm going to say we see, oh, shoot, no, that's not it. I'm going to say that we got Ethereum moving to, let's use our fib. Okay. 700. Oh, this is market cap. Let's go to Coinbase. Give you a clear representation. All right. So I got Ethereum moving to using the fib. Fair value about 6,300. Okay. Somewhere around there. Who knows? And then if we really get elevated, we could move as high as 16,000, right? As high as 16,000, which would be what? A good 4x from here. That's pretty strong. It could happen, man. There's so many bullish things in crypto, and it all happens at once. So what does that take Bitmine? Well, I don't know. There's a lot of calculations out there. I've seen as high as, maybe this cycle, Bitmine moving back into the hundreds, okay, which would be a triple. Now, if it pulls off a MicroStrategy and moves out 2 times ETH, if ETH does a quadruple, then Bitmine's probably going to do an 8x. Where does that take Bitmine from an 8x? It's an 8,000% return. We're looking at $200, right? That's crazy. 250. Let's just keep it even. 250 from here. That's a good 10x, right? About. So I think there's a lot of potential here for Bitmine. All right, keep your eye on that. We're not at breakout point yet, though. We might have more consolidation. We'll see. And yes, they are competing with some other things, but I'd rather go with them if I had to blindly choose. All right, next we have Chainlink. Okay, let's do some Chainlink analysis here. Chainlink looks great. We're breaking out of that, downtrend. We've broken the downtrend, so we're finally free. We broke it before, but we just couldn't hold, right? We broke this downtrend. And then we did a reverse head and shoulders, broke out, couldn't get above the last resistance. How do I find that resistance? We use volume profile at the highs, right? We look at the highs. We could even pull it back to the last low, the previous breakout back in November when Trump was elected. And you can see most of that volume is down here at 9 billion. Link, I'm over here on market cap again. But the fair value for it, when we broke out here, we couldn't fill that gap up to 14. You know what? Let me change this. Damn it. Sorry. Let's get back to the actual price because nobody's looking at market cap. I like market cap. I think it's better. So same thing. I got it drawn out here. So anyways, it just couldn't move out of that zone. And we really need to get above 21, right? We need to get above 21. We need to hold 18, in my view. We need to hold 18. That's where we got stuck last time. So as long as we hold this 18, that's another cup and handle, then we could move to 21. I'm very bullish on this. I just think it needs a stronger narrative. I think we go to 35, and then we move to 75. And then if we really get a super blow off top, I think 100 is possible. It should have been, earlier. It's a smaller market cap with a bigger narrative. I think we're moving to as high as 150, 175, right? For Chainlink over the next, I'm going to have to say 6 to 12 months. It could happen. It's a smaller market cap. I think 100 billion takes it to like 85, right? Okay, so that's Chainlink. Also bullish on Chainlink. MSTR. Now this one's going to have earnings coming out pretty soon. Okay, very diluted. Also, you can see that we were at all-time highs as far as market cap, but it's trending higher. Okay, it is still in an uptrend, very monstrous uptrend for MicroStrategy. And I know people are like, it's so expensive, bro. You don't even it's not a stock. We can't measure this in terms of stocks. The EPS is set to come out. The earnings per share is set to come out. As a matter of fact, in a couple days, I believe earnings are supposed to come out negative, but they can now mark to market their Bitcoin holdings, which gives them a 12 billion, somewhere around 12, $14 billion revenue. Income, right? After expenses. That would crush. They're going to beat earnings by like 1,000%. Who knows? Maybe 5,000%. And not only that, but this is a strong period for crypto. So that VIX spike is going to be very important to finding out where we are, right? To finding out where the bottom is going to be for the next leg of the bull market. Now, I said Bitcoin would be around 150K by the end of July or early August. That was my initial. So far, I think we're still on track. We got, as soon as we break out again, right? We get another breakout. We're headed for that 150. That's my view. That's what I think. Let's pull the fib out on here. Well, now we don't need. Yeah, let's do the Fibonacci. We're gonna do Fibonacci from the previous low, and then to this low. So when we do this, this is a log Fibonacci. Yeah, fair value 163. Not fair value, just the one fib, right? 164,000. I'm gonna say 150. I think we can get there by the mid-August, right? End of July, mid-August. We didn't get there by end of July. We got to 123. That's another, how much percent? That's another from here. It's another 25%. That makes sense. Okay. And then we consolidate end of the year. I think we push to 200,000. We'll see. So MicroStrategy should be in the 800s, right? 800s as Bitcoin gets to 150. That's my prediction. It's not financial advice. My prediction based on technicals, okay? And based on the fundamentals and the macro, all that stuff together. I like to combine it all. They're going to crush earnings. They're in the strongest theme in the market, which is crypto blockchain. AI is probably stronger, but AI is all concentrated in these big mega caps, a lot of it. So I think, crypto is the best bet here. And I've been saying that for a while. So of course it's like, oh, come on, Chainlink, where you at? I get it. I know, but it's coming. As soon as you say, you know what, I'm giving up, boom, it explodes. So here we go. MicroStrategy. We got BitMine, we got Chainlink, we got MicroStrategy, and of course we have Tesla. Okay, we have Tesla. No dilution on Tesla's part. Keep in mind, Tesla is expanding robotaxi. Every time we have more news on robotaxi expansion, we get closer to the solid narrative here, which is Tesla is going to be the biggest manufacturer in the world, okay, in 5 years. This is the best stock. If I had to buy one stock, this is the only stock I'm buying in my Roth because I think it's going to be here for a long time, okay? Tesla is leading in battery storage, energy storage technology to power what? Data centers and every other technology. Number two, they're way ahead of the game when it comes to physical AI and robotics. These robots are not only doing construction. One day they could probably be Superman. Hopefully they don't turn on us. But hey, if you own the robots, at least you can have some wealth or some freedom. And they can do, they can do dishes. That's how sensitive they are. They're like humans. So you want to own Tesla. You want to own the damn Tesla. This pattern is very bullish. I get excited when I see patterns like this. I got one leap call, right? I'm going to add the next one once we start to accelerate. When does that acceleration come? It can come as soon as the end of this week, or it could come, June, July, maybe September. We'll see, but we're in an uptrend. This is one of the only Max 7s whose momentum is still accelerating to the upside. Apple's another one. So right now, when it comes to Max 7, if you look at these mega cap stocks, when I say RSI, what I'm going to do is I'm going to isolate. I'm going to take stochastics off. We're going to look at the MACD and the RSI. Those are our momentum indicators, and we're going to go through some of this Max 7, right? So if we go to NVIDIA, obviously the biggest stock in the market, NVIDIA's overbought. Okay. Now, I'm not doubting NVIDIA. I mean, it has the strongest earnings growth in the market. The problem with NVIDIA is I think it's front ran a lot of its earnings. I think the stock is already most people are asking, should I sell? Okay. They're not saying, oh, let's buy NVIDIA at the top. I don't think so. You want a big correction, not bullish on NVIDIA. Next mega cap. Let's go to Google. Google looks good. Okay. I actually like Google. Hasn't even made all-time highs. It's coming against this resistance. You got a double bottom here, but we are also overextended on the daily. Okay. We're overextended, meaning it has momentum, but and especially after earnings, I'm not saying I don't like Google. I actually think I like Google better than Microsoft at this point. Okay. Microsoft overextended also. It's probably going to chill out. Look at that MACD just falling. So we have Google that looks good. You have Tesla that looks good. We're going to come back to Tesla. I like Apple. Okay. As a trade, I'm not going to own Apple. I think they've already peaked, right? And they're probably going to come out with some AI tool pretty soon. Apple looks great though. I have Apple moving to about 270 and 300 by the end of the year. That's super bullish. Bear case, we just get back to all-time highs at 260. But Apple looks good, still climbing on that RSI. MACD still climbing, not as smooth. It's broken the falling pattern. We need to get to earnings. I like Apple. Okay, I like Apple. What about Meta? Overextended. Okay, Meta overextended. It's cooling off. It already overextended. Meta double top. Meta is rolling over. Okay, you see that RSI coming down? It's going to reset. You want to wait for the reset on Meta. It's probably going to form a wedge over the next 3 months. It's probably going to form a wedge pattern. Right? The wedge pattern is basically like a pinball machine that just gets tighter and tighter and tighter. And then eventually, boom, you have a lot of momentum, you get the breakout. Okay. But you can see it's cooling off. So Meta's not there yet. Netflix, way too overextended. I don't even know if this isn't even Max 7, but it's cooling off. Okay. So Apple, Amazon, Google, Facebook, Amazon, AMZ. Amazon, I don't like it. I mean, I think it can gap up and run, but risk reward wise, there's, Tesla still, I think, has the bag. Okay. I still like Tesla. Look at the RSI still, consolidating, barely starting to pick up. If we go to that weekly chart, we can see that it's already reset. It's starting to reaccelerate. It looks great. But we'll stick on the daily. For now. All right. Next stock is Dominion. No, I'm just playing. Next stock is Qualcomm. I like this one. I don't usually look at these. AMD, we've already, we rode AMD for a while. Let's go to AMD real quick. AMD looks amazing. Don't get me wrong. I love AMD, but it's overextended. Okay. Can it still, like, day traders are going to eat this up, right? Short-term swing traders are going to eat this up, but it's up a lot. It's overextended at this point. I think I got out in the 150s. I'm like, damn it, I should have held longer, but of course, woulda, shoulda, coulda. It's all good. I made a good amount on it. I think I made 500% on some debit spreads. There were like 300 calls out to 2027. So I could have blindly left it, but I want to see the pullback and get right back into them. I want to see a vicious pullback on AMD before earnings, and then I might get long. If it's not big enough, whatever, right? I want to see some consolidation. Back to QCOM. Qualcomm, on the other hand, has been consolidating at these levels since 2021. So you can see the RSI is accelerating above the halfway mark. That is next level acceleration. And we also, what are we at? 39 minutes. Okay, I'm going to keep this to under an hour. That's my goal. So I like Qualcomm. Look at the technicals. Looks great. We're probably above the moving averages. It's irrelevant. I don't need to see the moving averages right now. Like, the patterns tell us enough. Okay. But we might get a little pullback. We might retest. Either way, it looks better than the other ones, right? We also have SMCI, and this one's a momentum play, obviously. Now, keep in mind, SMCI is data centers and AI servers. Okay, AI server data center. That's what I think is going to do very well. I'm not an expert on what they do, but damn, these technicals look good. And I don't like SMCI because I don't understand it, right? I'm not a technician guy. I'm not a computer guy, but the chart looks amazing. So it's not even overextended yet. This is the weekly. Let's go to that daily. Daily, it could probably pull back a little bit. So if we get to the halfway mark, I'm going to really like SMCI. What is Qualcomm on the daily? Look at the daily on Qualcomm. Still climbing. Okay. So I like Qualcomm. It's 174 billion market cap, not crazy expensive. And it's more AI, chip demand, wireless leadership, blah, blah, blah. Tesla's multi-sector innovation. We already talked about it. So those are my top picks right now. I have some other ones at the bottom, which are, we talked about Apple breaking out. CRISPR, these are resets. We're not done here. CRISPR is resetting. Okay. We want to see it got stuck at the VWAP, the anchored VWAP. We're on the daily chart. You can see it's starting to reset. So this might take a month, but as long as it holds 50, okay, that's where I'm going to rebuy. Got out of my call. As long as it holds 50 and, the narrative picks up, I really like CRISPR. I'm going to wait till after earnings though. Okay, so CRISPR looks great. Couldn't get above anchored VWAP. Okay, but I'm waiting for the reset on CRISPR. Now, what pattern am I looking at long term? I'm looking at this big wedge. Okay, I'm looking at this big wedge, this big wedge break, which looks a lot like in NOVIX, ENVX. These things ran up, but it's time to cool off. They need a reset. Remember, we just looked at high beta. High beta is cooling off. So VIX spike to 20 is going to give you the opportunity to start looking for a buy the dip. Okay, so Enovix still accelerating on the MACD, not there yet. We didn't want to look at Enovix. I just want to say that if we break these patterns, it's going to go crazy, a lot like SMY, Symbiotic Robotics. I love this one. This one can fly. I really want to own this. I really want to get a leap and just hold it. Never hold it long enough, but I really want to hold a leap on Symbiotic now that it's broken the down pattern. Okay, and we have buying pressure. What I want to see is it start to form that second point of contact, right? Wherever it is, we don't know where it is, to start an uptrend for the first time since 2022, right? This thing can fly. Right away, my instincts want to say how much market cap has been diluted. Where's the damn market cap at? Show me the market cap, bro. Why isn't it showing me? Oh, no, where is it? Okay, you're gonna glitch on me? Stupid. Let's try one more time. So why is this not showing the market cap? There we go. Okay, there was a glitch. So how much dilution do they have? Well, it's not that much. The dilution, it looks pretty even. I'm looking for these tops. Okay, broke all-time highs. Yeah, it's not too diluted. It's really not too diluted. It looks good. So I like Symbiotic. Remember, this is a robotics play on manufacturing. Exometry is also something I'm waiting for. Actually, this one's looking really good. I'm pretty soon, just for some of you who are in here, you want to see, I'm gonna make a video. I don't know if I should do it live or not, where I'm buying. I'm gonna, do an experiment. I'm gonna put 1,000 in a portfolio, and you guys can watch me buy each stock. It's probably for beginners mostly, but we're gonna outperform. I'm gonna put together a high growth cyclical tech thematic portfolio from what I think my research is going to outperform S&P and NASDAQ. And I'm going to try to double it in the next 6 months. Okay. And will I shift around some names? Yeah, I could probably just leave it there. But I of course, I want to get some views on it. Like, hey, get some eyes on it to let people know, like, hey, you can buy growth. It's going to outperform. But also, it should be a fun little experiment. So look at Exometry. This is a AI digital manufacturing. So the 3 AIs that I'm looking at, artificial intelligence that's not mainstream, is going to be, is Symbiotic really AI adjacent? Yeah, but I don't know if it's considered, AI. It's mostly robotics, automation, which is it? It's mostly robotics, but I still like this one, right? The other AI is Tempest, right? Tempest AI in the healthcare sector. This is forming a huge wedge. By the way, this is almost at the buying opportunity. I'm looking at 50. Anything below 50, I want that. I want that. Okay. At Fetty. No, I'm just playing. Been hanging out with my country friend too much. So 50, this is forming a huge wedge. Remember, we first bought this back in 2025 January. No, was it before that? It was when Nancy Pelosi basically started buying call options, right? So Tempest AI is artificial intelligence for is it healthcare? I mean, we can say healthcare. What's more specific? Healthcare technology, artificial oncology. There we go. Oncology, cardiology, infectious disease, blah, blah, blah. So this is going to be a huge breakthrough, I believe. Kathy Wood's in it too. And I want to buy a leap call 2027, right? Nothing short term. So I like that. So I like Exometry, XMTR. I like Tempest AI. Those are two AI plays you're not going to hear too much about. Exometry is digital manufacturing, and they're the lead. They're in the lead right now. They're a monopoly. What they do, they're just not profitable yet. As soon as they become profitable, I think it doubles. So I like Exometry. The other AI play, Symbiotic Exometry. Who's the other AI play? Well, Palantir, but damn, Palantir is not giving us a buy. I think soon. So much bearish divergence, it should give us a blow off top and a pullback at some point. The question is, where does it, it looks like Nvidia where it just doesn't really come much lower. If anything, anything under 100 or at 100, I think you got to buy it. Does it get that far down? It might not. It really might not. Fair value 122. I mean, shoot, you might have to scale in at 122. So you're hoping Palantir really gets crushed. I think the PE, what is the PE? I mean, this thing is way overvalued as far as normal metrics, but it's not a normal stock. 693. It's not a normal company. The growth rate is insane. Nobody does what they do. Number one AI play in the market. So you definitely want some Palantir. My top stocks over the last 5 years have been Tesla, Palantir, Bitcoin, Ethereum, and Chainlink. Those are the five, right? Which one am I most bullish on at this point? Tesla and Chainlink. Okay, what else we have on here? Lemonade Insurance, right? That's another AI play on insurance. Lemonade Insurance, it is hurricane season, so they might be consolidating, but I like Lemonade. So Exometry, Lemonade, and did I already forget? Exometry, Lemonade, Tempest AI. Ooh, I'm excited. And Symbiotic, but it's more robotics. Okay. CRISPR, we'll see how that plays out. So those are the plays I'm looking at. Home builders are also doing very well. But before we hit home builders, let's talk a little bit about the Great Reset. Okay. I'm going to turn for this one because I got it on the board. Make sure I remember it. Part one of the Great Reset was in September. That was the initiation of global supply chains coming back to the US. We started that. It caused a trade war uncertainty. The market fell 20%, reset. We bounced from there. We're back up. Trump flipped. Why? Because the bond market forced him to, because the bond market is the most powerful force. Okay. So we're rerouting our supply chains back in the US. We're having a lot more manufacturing. Jobs are plentiful in certain areas, blah, 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 right? Part two of the Great Reset was finding a buyer for the debt, for the tax bill, really. And we already passed the damn tax bill, so you got to be bullish. But finding a buyer to buy those US treasuries, and we do. Who is the buyer? It's crypto. It's any exchange or any company that's issuing stable coins, which are the new digital cash in the future. Anybody issuing stable coins has to back it with treasuries. And now there's a buyer for US treasuries. So we're not worried about the bond market. Rates eased. Great, bull market. Part three is lowering rates. Not necessarily, you could say both the Fed and the Treasury. Well, the Treasury rates are going to stay stable for a while, but you want the Fed to cut. Hey, I thought we'd get it in July. Not happening because the market is holding on. A lot of the tech is just very strong, right? Technology is creating more. I mean, like Mark Zuckerberg paid somebody $100 million. Are you kidding me? They're spending $200 billion on AI infrastructure. It's just insane. There's going to be jobs, right? Maybe not the job you want or somebody complains about, but there's enough out there. So the economy is not going anywhere anytime soon. All right. So lowering of rates, Powell's supposed to cut. We won't know till tomorrow what he says. I think we get that cut in September because of disinflation. Is tariff inflation happening? Hell no. We haven't seen any tariff inflation. Why? Because some of the producers are eating it up, some of the manufacturers are eating up, and some of the consumers are eating it up. So you go through the whole supply chain, and bit by bit, a 10% increase in tariffs comes down to final price at 2%, right? So there's just enough liquidity
for that to happen. Number three, the next part of the Great Reset is a China trade deal. That's the biggest part, right? We now have a trade deal with the European Union, right? Now China's the next big trade deal. If you get a trade deal with China, which could take a couple of years, next year, who knows, incrementally, that's the game over. Like you should be, the market's gonna gap up 50%. And I'm just playing. The market is gonna be crazy. You want to be in before that, right? So be prudent. A lot of excitement here. Going forward, I mean, look at breadth. Let's look at market breadth really quick. We haven't done this for a while because, I mean, the market's just been so strong. But if we go to market breadth, which is the amount of stocks moving higher, this is one segment. We have the actual candlesticks, and then we have advanced decline. So these are the amount of stocks in red above the 200 daily moving average. See how it's just climbing? And we had that big dip in April. We've been climbing ever since. So the amount of stocks above their 200, which is their long-term trend, continues to increase. When we see bearish divergence, like we saw back here, that's when we got to be worried. You see how this was the amount of stocks over the 200 moving average is coming down, and then it makes a lower high. All those stocks made a new high. That's bearish divergence. So we knew, hey, we're going to get a correction. We didn't know it was going to be that big, but we had a correction. Right now, we're getting higher highs on the amount of stocks moving over, right? Breadth. We had advanced decline line, and that's the amount of stocks advancing versus declining. We saw the same thing back here. You had bearish divergence. We're not going to get too deep into what that means, but the point is we're still very bullish, okay? If we go to our other one, our overall, we can see, damn it. What am I doing? Am I tripping here? Why is it disappearing? Okay, there we go. All right. So if we go overall, we already looked at the 200. See how it's climbing up? We're above that 50% band. Remember in the newsletters, we said if we get above 50, it's game on. And it's been game on. Okay. Above the 50, amount of stocks above the 50-day moving average, still consolidating. Above the 5-day moving average, I believe, consolidating. So we're probably going to see a correction here. We've had very strong breadth, amount of stocks making new highs. Trying to see if there's anything special here. Not too special. Looks good. Okay. Market breadth in terms of sectors, right, are different. Oh, why is this one not? Oh, no, it's not. So IPOs, they're doing all right. IPO sector is doing all right. I'm going to move this to let's keep it on the daily. IPOs sector is consolidating. The total crypto market finally broke out of that downtrend, consolidating. Okay. Still hot. SPHD. Oh, this is high. This one's important. This is high beta. Yo, what the heck happened here? This is wrong. Let me change this. This should be SP high beta over low beta. So offense versus defense. It should be that. Okay, there we go. So, oh yeah, that thing looks stupid. So that's what this is it's high beta stocks relative to defensive stocks, low beta stocks. And it's over, it's overbought. We need to put that on an RSI to see where it's at, but it's up there. So we're in a bull market. Don't let nobody fool you. Look at small caps, our micro caps exploding, right? We've been seeing that for a while. A lot of short squeezes happening. So I think we take a breather here. We're looking for the VIX. Let's go ahead and wrap it up. We're looking for the pullback on the VIX. Let's make sure I'm not missing anything. Or the pull up on the VIX. Economy strong. I mean, the economy is fine. The economy is totally fine. If we look at the bond market in terms of move index, which is this is fear. If it goes up, it's fear of the bond market. There's no fear. There's no fear in the bond market. Okay. If we go to the credit market, which is our triple B spreads, are people buying more stock bonds or equity bonds? Well, if it goes up, they're buying more stock bonds. If it goes up, they're buying more treasuries, meaning they're protecting themselves for a recession or for a slowdown. They're buying more equities. We can see that in J&K, which is the junk bond market, almost making new highs, but it's strong. So looking good there. Credit market is strong. High yield is strong. What's our other metric? We already looked at the VIX, J&K, yields. We looked at yields. Yields are coming down, right? 10 years coming down. The dollar. I mean, the dollar is breaking to new lows. Oil is that other one. Oil's going nowhere. So you have a bull market on your hand. There's nothing that I see that's too imminent. You got to pick your spots, and we already went over those spots. So the VIX, look for that VIX spike up to about 20. I think that's all I have for you guys today. Anything I'm missing, subscribe to the newsletter. If you want to check out the Discord, it is in the link for YouTube. I'll throw it in the comments on X. So we have a Discord. You have there's some stuff on there. If you want a community, you want to join a community, talk a little bit stocks, whatever. So yeah, I think we're looking good. We're probably gonna get gold pulled back too now that all the panic is over, right? I am the most bullish on Chainlink. Maybe this doesn't play out this cycle where it outperforms everything, right? You got to be realistic, but this is a $10 billion market cap. Maybe it's like 14 billion now, 14, 15 billion. Where are we market cap wise? Link USD market cap. Okay. So we're at a 11 billion market cap, 12, whatever. And the total addressable market is insane for what they're doing. It just doesn't exist yet because, the market hasn't realized that all of Ethereum and smart contracts and blockchain, none of it works without Chainlink services. It's going to power the financial system in the future. Chainlink's going to power the financial system. Why? Because they have proof of reserves. Everything's moving to the blockchain, right? New financial system. It's moving to blockchain technology. That means private and public blockchains. Public as in XRP is public, Ethereum is public, Bitcoin is public. That's the public stuff. But all these financial institutions are building their own private blockchains. They need to connect it to the public blockchains. There's only one asset that provides the services to connect the public blockchains to the real world, right? To the private blockchains. That's Chainlink's CCIP services, proof of reserves to track the legality and compliance for these rules that are going into place, right? Functions, automations, all this stuff. This is new technology, right? It is the connector of blockchains. It goes further than that. Number one, they all got to pay the transaction fee. Swift is paying it. They got to pay the fees, right? That's the revenue for Link. They got to pay fees to use to lock in the internet. It's like paying the internet fee, right? Everything works on the internet. What do? You pay your Wi-Fi. That is what Chainlink's going to collect is the Wi-Fi. Here's the difference. You pay a Wi-Fi distributor to use the internet, right? You don't pay the internet technology. So think of it that way. Imagine if you paid a fee to use internet, but you paid it directly to the protocol, the internet protocol. That's how Chainlink is. They're all going to be paying a fee to one network and you can own it. On top of that, this is not just about finance. This is also about data transfer in general. With all these deep fakes, they also have a thing called zero knowledge proof where they can prove things with zero knowledge. That is a new iteration of cybersecurity. So I think they disrupt cybersecurity. They disrupt finance, the financial system. They're going to disrupt a lot. All data transfer is securely, anyways. If you want transparency, it's going to have to go through an Oracle service like Chainlink that provides all of these fundamental things. You see how boring it is, though? Like, what? That's not sexy. It's infrastructure. Okay. So I'm the most bullish on Chainlink. Anyways, we're at 58 minutes. We're right under 10 minutes. I appreciate you guys. And I'm going to make that portfolio video pretty soon. It's going to be, I'm going to choose like 5 or 6 stocks and cryptos. And we're going to see if we could turn 1,000 into 2,000. Maybe I do 1,500, who knows? Because I want to get a certain amount. I try to make it exactly 1,000, but one Tesla stock's already a third of that. And I didn't want it to be a whole third of the whole portfolio. So we're going to try that soon. Maybe you're interested, maybe you're not. Either way, I appreciate you guys joining. I will catch you next time. Stay blessed. Get your workout. Learn something new every day. Eat healthy. Eat a good diet so you can live longer, so we can enjoy the wealth creation that we create. If you're going through hard times, bless you. Stay in connection. Okay. Matter of fact, let's go through what is today's thing. Let's go ahead and go through today's proverb. Today's proverb. We do this in our Discord, but let's do today's proverb. Maybe some of you guys might need this. Okay. Today's proverb is book of wisdom, whoever gives to the poor will not want, but he who hides his eyes will get many a curse. That's all I have to say. Stay wise, give to the poor, give to those in need, and stay blessed. I'll catch you guys next time. Thank you.